Okay, now we are in section 3. There are two questions, both questions are compulsory. Total marks for this section is 40 marks and 72 minutes allocated. That means 36 minutes for each. Okay, we will see this question is given for standard costing and it has been combined with budgeting, like fixed budget and flex budget concept is there, right? First we will read what is the required. Explain how the industry benchmarking is practiced could improve the standard costing system at ASL benchmarking. Prepare a revised budget to be used for performance evaluation 3 marks and assess the following variance for the month of June. Okay, right. We will read. While reading, without reading this illustration, we can answer how to apply benchmarking in this kind of company, right? Okay. Benchmarking means you will compare the best practice of the industry and you are trying to implement those best practice within your organization. If you are benchmarking with the industry competitor or industry, the best performer, and you will identify best performance and best activities they have undertook and you can implement in your operation, in your organization. Benchmarking, generally you will compare the best practice, identify the best practice. Best practice in the industry you will identify and you will implement. Benchmarking is an attempt to identify best practices and achieve improved performance by comparison of operations, right? When applying benchmarking to the standard costing system, a standard is set by looking at the benchmark data. You will set the standard looking at the industry benchmark. Then you will try to achieve the improved performance through the industry benchmarking. Then ASL compare what is the industry benchmarking. Assume to manufacture one unit, it require 10 hours, but industry bench performer, it only takes in the process they will take only 5 hours. Then you will see their processes and you will set the target and arrange the process accordingly. That is industry benchmarking. Industry benchmarks allow ASL to set its standard by looking at what other organizations in the same industry are achieving. While we are doing like this, how competitors will do that and how best performer in the industry will do that. Then you can compare the best practice. They help organizations to set most realistic budgets through standard costing and also help easy comparison of performance result with competitor results. You can easily compare when competitor is performing. If our cost is high than the competitor, then you can see how we can eliminate those inefficiencies. Industry benchmarking motivates best performing managers and poorer performers will also be motivated to improve their performance level. That is best one. In some situation we will do some benchmarking, but in some situation, okay, as an example, when you are studying, there is a good student there, he is scoring at a higher margin. You compare what is the best practice, what are the, you are earning around middle range mark you are earning. You will see what are the things he is doing. He will focus and he is regularly attending the class and he has a timetable to work out. And he is doing more past papers. That is the secret behind his or her success. You will identify those practices, you will benchmark them and you will follow the same. You will motivate and you will improve your performance as well. That is the kind. Right. Okay, then we have already answered. Now, the performance report prepared for the month is given. Right. Look at Atlantis Sportwear is a wholesale sport item manufacturer that mainly serves the local market. Its footwear division caters to highly competitive market segment representing international brand names. The factory operations are handled by the factory officers while the procurement needs are centrally fulfilled by ASL. Okay. A standard absorption costing system is used for planning and controlling purpose absorption costing technique. When absorption costing technique there, you know that in variance calculation, there are two variants will be differ from the marginal costing approach. I think you know that in absorption costing, we will calculate fixed production overhead expense and volume variance, but marginal costing we will only calculate expense variance. Sales volume margin variance differ from sales volume contribution margin under marginal costing approach. Anyway, standard for budgeting purpose are set on periodical basis and variance analysis report is prepared at the end of each month. Okay. Given below is the performance report prepared for the month of June 2022. Look at sales revenue budget 75,000, actual 91,000, variance 16,000, figure sign rupees 1,000. Right. Material cost 30,000 is the budget, actual 38,000, adverse variance 8,000. Labor 15,000, 22,000 is the actual, 7,000 adverse. Production overhead 6,000 budget, 7,000 is the actual, variance 1,000. Budgeted profit 24 million or 24,000, actual 24,000, there is no deviation. Right. By looking at them, you might see, there is no variation, but we have to see what are the reason for this deviation. Okay. Look at this one. The total budgeted number of sales unit for the period was 15,000 pair of units of shoes. 15,000 pair of shoes. Right. If it is 15,000, you can easily calculate the budgeted selling prices and all, everything you can do. Okay. 75 million, okay, 75,000 divided by 15, your selling price is 5,000. Selling price is 5,000. Okay. Okay. Selling price is 5,000. Selling price is 5,000. Right. 15,000 unit of shoes. Right. All. Right. During the month, one major wholesale buyer signed a contract to purchase shoes of another brand, and the monthly committed additional units under this contract was going to be 3,000 units. Then you have signed an additional contract for 3,000. Then 15,000 plus additional 3,000, your budget should be revised to 18,000. Right. Because originally you have budgeted to sell 15,000, now you are selling additional 3,000, altogether 18,000. Details about this new contract were not available when setting the original budget for June. That means you have set for 15,000 unit sale revenue 75 million. Now you have to consider if it is 18,000, how much it would be. And it says that the actual selling price per pair of shoes month was 5,200. Originally budgeted 5,000 is the original budget. Actual is 5,200. There is no indication there. Price is going to be changed. Right. Then if the price is 5,200, you can see how many units they have sold. How many units they have sold? 91 divided by 5,200. You can quickly work out. Then you can easily answer this one. 91 million, 15,000, sorry, it should be 5,200. 5,200. 91 million divided by 5,200. Actual sales quantity now you can get 17,500. 17,500 actual sales value. 17,500. Actual sales quantity 17,500. That's great. Okay. Half a unit of imported material is used to make a pair of shoes. Half a unit, that is material. During the month, total 8,600 material units were purchased and fully used in the factory operation. 8,600, that is the total utilization for 17,500 units, right, Lamai? The material market faced a huge disruption due to the adverse environmental conditions, and limited stocks were available in the market in response to the situation. Most of the suppliers charged rupees 500 extra per material unit. Further, it was noted that the standard material usage should have been 0.6 material per unit of pair of shoes. Okay, now we will see what is the material price. Originally you have charged 0.5 unit per pair of shoes. The cost, material cost 30 million. Okay. Now I will work out if it is 30 million, right? If it is 30 million, 30 million, 30 million, 30 million. This is for 15,000 unit, that is the original budget, no? 15,000. Then 30 million divided by 15,000, it should be 2,000. Material cost per unit is 2,000. Each unit use half a unit of material. Assume half a kilogram of material. Then that half a kilogram of material equal to 2,000. If you divide this one by 0.5, material price is 4,000, current price. But now the price will go up with the limited availability. It will increase by additional 500. Now this need to be changed. The new price will be 4,500 per unit. 4,500. New use or revised use should be 0.6 units, not 0.5. That we need to do, that we need to adjust. Now I have kept that in mind. Okay, 4,000 is the current purchase price. It will be revised to 4,500 per unit. And material usage, earlier it is half, 0.5. Now it is increased to 0.6 units for the pair of shoes. That you those information you have to mark it. Then you can easily address the required illustration or requirement of the question. Third one, standard time required to make one pair of shoes was 2 labor hours, and during the month total 36,000 labor hours were actually paid for. 2 hours per unit. You have paid 36,000 labor hours, right? Considering the competition in the market, ASL introduced additional quality standard into the production process. An extra 10% of time was estimated to fulfill these additional requirements. The workers who follow a similar level of quality standards are paid 100 rupees more per hour in the market. First you have to find out what is the current rate they are paying. Okay, now you can see labor cost 15,000. This 15,000 for 15,000 unit, that 15,000 in rupees 1,000, that is 15 million for 15,000 unit. Per unit labor cost is 1,000, right? Okay, I will work out here, I will show you. Total 15 million, the labor cost, 15 million, 15 million. This is for 15,000 units, that is the budget. Budget cost 15 million, budget unit 15,000. That is 1,000 rupee per pair of shoes. Each required 2 hours. 2 labor hours mean if you divide this by 2, current labor cost 500. Current labor cost 500. Now You are paying additional is when you are going to increase the standard of this product, you require additional labor time 10% and you are paying additional 100 rupees. Then 500 plus additional 100, your revised labor cost will be 600. 600. Currently you are taking 2 hours, 2 into additional 10% 1.1, that is 2.2 hours will be the revised hours. You require additional 2.2 hours, labor hours 2.2 hours you require, right, that is done. That is about labor. We will see other developments. Fourth one, production overhead are absorbed to the completed unit on a labor hour basis, it will absorb. During the month, ASL implement a few overhead control activities over its factory operations. These activities would bring saving of 10% of production overhead absorption rate per labor hour. Now, you have to find out what is the current overhead absorption rate. First, look at what is the labor cost. Production overhead cost 6 million, right? That is 6 million for 15,000 units, right? We will look at that is 6 million for 15,000 units. 6 million, this is for 15,000 units. Per unit, overhead cost will be 400. Each unit use 2 labor hours as original. Then, if we divide by 2, then it equal 200 per hour. This is the rate, overhead absorption rate. But there is a 10% saving. Now it become in 90%. Therefore, 200 into 90% will be the new absorption rate, that is 180 rupees per hour. Now, revised labor time will be 2.2 hours, right, into 2.2 hours. Hours are, it is based on direct labor hour basis. ASL makes sure based on orders received and hence there will not be any opening or closing inventory. That is done. Those are the changes. I have highlighted all the changes. What we need to do? What we need to do? Prepare a revised budget to be used for performance evaluation. Revised budget. Okay, we will do the revised budget and we will prepare full detail. How are we going to calculate revised profit and revised revenue? Okay, I will work out this one here. I will take the description. If you put working here, working and value. First, revenue. First one I will take revenue. What is the revenue value? Now, initially you have budgeted 15,000, additional there is a commitment 3,000. Therefore, sales revenue, okay, I will take sales units. $15,000 plus $15,000 plus additional 3,000, 18,000. Anything to be has been changed for selling price? No, there is no indication where selling price has changed. We have already worked out selling price. How did we compute it? 75 million or 75,000 divided by 15. it is 5,000. Right, your sales value, I will take the sales value here. Sales value will be 90 million. I will put it at 90,000 rupees in 1,000. Sales revenue should be 90,000. Okay, value in rupees 1,000. Then we will look at material cost. Number 2, material. Material cost. Material cost, can you remember, current rate is 4,000 because we have already calculated standard rate. I will say standard rate, total material cost 30,000. Right, this is for 15,000 units. 15,000 units. Each will consume only 0.5 units. Then standard rate will be 4,000. With the increase of price, new price is 4,500, revised price. Revised price. Revised price 4,500. Revised price 4,500. 4,500. Revised quantity 18,000 unit or revised usage, each will use 0.6. Revised usage. Revised usage. Usage. Revised usage. Revised usage how much? You can get the revised usage 18,000 each 0.6, not 0.5. It will be 10,800. 10,800. Then 4,500 into 10,800, 48,600 will be the material cost. 48,600. Revised material cost. That is second one we have done, material cost. Okay, now third one. We will take labor. Third one, labor cost. Labor. What is the standard rate? 500 per hour. Now revised rate 600. Revised rate. Revised rate 500 plus 100. We have already worked out 600. 600. Revised rate 600. Now each unit we require 2.2 hours. Revised hours. Revised hours. 2.2 hours into 18,000. Look at how many hours we require. 18,000 units, each require 2.2 hours. 39,600 hours required. 39,600 hours. 39,600 into 600 will be the cost. 23,760. 23,760 in rupees 1,000. That is the labor cost. Then fourth one, variable overhead. We have changed the revised rate, absorption rate 200, revised rate 180. revised rate 200 into 10% cost saving, that means 90%, it is 180. Will be absorbed based on number of direct labor hours. This is revised labor hours 39,600. Revised hours 39,600. Then cost 39,600 into 180, 7,128. Now you can see what is the ultimate answer. What should be the ultimate answer? Now this is the revenue, material, labor and variable overhead. After the revision, these are the revenue and these are the cost. Finally, you can take what is the profit. What is the profit? If you work out this one, your profit, revised profit should be 10,512. 10,512. This is the revised profit. Revised profit. This is the revised profit 10,512. That means 10,512,000 is the revised profit. This is the revised profit or revised budget based on revised information that we have changed. Right. Okay. Now we will look at the remaining requirement. Assess the following variances for the month of June 2022, because you have the information now. You have the original information, you have the revised information. Now what you need to do, you have to work out how these should be worked out. First one, sales volume planning variance. When you are going to calculate sales volume planning variance, first you have to look at about the standard profit, how much. Here, in the original budget, operating profit 24 million for 15,000 units, that is your standard profit margin originally expected, right. Therefore, original profit was 24 million divided by 15, that is 1,600 is the expected profit per unit based on the original estimate. Now, here it has sales volume planning and sales volume operating variance. Now we will calculate, because standard cost details is given, because planning and operating variance we have to calculate. We will do. Therefore, sales volume planning variance, first one we have to calculate. Sales volume planning variance. First one, sales volume planning. Sales volume planning. When you are going to calculate sales volume planning variance, you have to compare revised sales quantity minus original quantity into standard profit margin. The standard profit margin. The revised quantity was 15,000. Can you remember 15,000 earlier one? 15,000 was the original, additional 3,000, then 18,000, right. Therefore, 15,000 is 18,000 is the revised quantity minus original quantity was 15,000. That means you have sold more than originally expected. The standard margin, standard profit. The standard profit you can easily work out what is the original profit you expected 24 million divided by 15,000 unit, that is 1,600. 1,600. It will be 4,800,000, it is favorable. 4,800,000, it is planning variance favorable. 4,800,000 planning variance favorable, right. Sales volume operating variance, planning and operating. Operating variance, very easy. Sales volume operating, sales volume operating. How to work out? Now you will compare actual quantity versus revised quantity. The standard margin remains same. Actual quantity we have already know. We know that already. If you go back and see, actual quantity was, no, actual quantity is 17,500. Initially we have already calculated 17,500. 500. Revised quantity 18,000. Standard margin 1,600. 500 unit less you have sold, that means 800,000, it is an adverse. It is an adverse variance. Sales volume operating variance, it is an adverse. Right. Next one, material price planning variance. Third one, material price. Material price planning variance. Remember, these planning variance are uncontrollable. Operating variance can be controlled by the management. When we are going to do the comparison, planning variance, original versus revised. Operating variance, we compare the revised versus actual. Planning price variance, you will compare original price minus revised price. Okay. If there is a change between original and revised price, then what you have to do, you have to work out, you have to calculate, you have to see how much the price being changed, which are within the control of management or within, which are beyond the control of management. Right. Now original price was how much? Original price was original price minus revised price into revised usage. Revised usage. Revised usage of actual production. Original price was 4,000. Revised price 4,500. Revised usage. Revised usage of actual production. Generally on there are two approaches to work out, but I will do in this approach available in the study text. When we are going to discuss about pricing, planning and operating variance related to price, you should not consider the effect on change in quantity, you have to take the actual quantity. But here I am going to use revised quantity. There are two approaches. Then total planning and operating variance will be tallied in this approach. Okay. 4,000 minus 4,500 revised usage of actual production, I will work out, it is 17,500 is the revised production, actual production, revised usage 0.6. Simply 500, it is an adverse, it is an adverse 500 into value of this one, 17,500 into 0.6, 10,500. Anyway, it is negative 5,250,000. It is an adverse variance. Material price planning variance and adverse variance 5,250,000 adverse. Okay, next one it asks about material usage operating variance. We will move to the next one. Material, fourth one. Material usage operating variance. Operating variance, material usage operating variance. Material usage operating variance, we will compare revised usage versus actual usage. Revised usage minus actual usage. Right, revised usage minus actual usage. Okay. Then it should be multiplied by what is the revised price. It should be multiplied by revised price. Revised price. Revised usage. You have manufactured 17,500 sold, each required to use 0.6. That is 10,500. Actual utilization given in the illustration. You can go back and see actual material utilization is 8,600. 8,600. Revised price 4,500. It is a favorable variance. $8,550,000. It is favorable. 8,550,000 it is favorable variance. Right. Fifth one, labor rate operating variance. Okay, we'll move to the next one. Labor rate operating variance. Labor rate operating variance. You will compare revised rate versus actual rate you have paid into number of hours paid. Revised rate minus actual rate into hours paid. Revised rate, we have already worked out revised rate was around 600, right? Yes, 600. Revised rate was 600 minus actual rate. Is it given? Actual rate, you can go to the paper and see actual rate was actual 22 million. Labor cost actual rate is given. Actual rate into hours paid mean actual cost. Therefore, hours paid, what I will do, I will multiply this one. 600 into 36,000 hours you have paid minus actual rate into hours paid, total cost, actual cost given 22 million. Then it will be 400,000 adverse. 400,000 it is an adverse variance. 400,000 it is an adverse. The last one, labor efficiency operating variance. Labor efficiency operating variance. Okay, we'll work out sixth, labor efficiency operating variance. Labor efficiency operating variance. In labor efficiency operating variance, you have to look at revised hours minus actual hours worked into revised rate per hour. Revised rate per hour. Revised hours, you have manufactured 17,500 units, each require 2.2 hours. Take total number of hours required. 17,500 actual sold, each require 2.2 hours. It should be 38,500. Actual hours worked only 36,000. It is favorable. Revised rate per hour. Revised rate per hour is 600. Then it is a favorable variance. 2,500 into 600, 1.5 million favorable. 1,500,000 it is favorable. 1.5 million it is favorable. Right, we have addressed all the required variances in the illustration. All the planning and operating variance which asked to calculate we have done. Right. Now, last part of the question number 6, what it asks to do. Look at this one. ASL has a practice of paying a special bonus to all its factory staff if the budgeted results are exceeded. If the budgeted results are exceeded, they have been paid a special bonus, right? At a recent management meeting, it was mentioned that no special bonus would be approved for June 22 as the budgeted profit has not been exceeded. If you are the factory manager, how would you convince ASL management to approve the special bonus? Now, there are some variances which are beyond the control of management. You are only liable for, now we have prepared the budget, revised budget. The revised profit, this one should be 10,512. Why? Why that? Because you have to prepare by consider there are some situation where uncontrollable situation there. Therefore, the revised profit should be 10,512, actual 24 million. Now, there are some situation world market price changes cannot be controlled. Then this is anyway you have committed, it is an achievement, and because you are going to do some changes, the rate changes and labor hour requirement, these are some requirement, it cannot be controlled by the management. Therefore, your result, you have to compare this 10,512 with the actual result, okay, actual result of this 24 million, this is 24 million actual. You have already achieved the budget, right? You have already exceeded the target, because there are some variances, there are some cost escalation which are beyond the control of management, and you can't compare actual result with budgeted result because there are two different capacity. You have to flex it and compare, and you have to consider controllable variances and uncontrollable variances. We will see the answer. It says, okay, actual result could be lower or higher than the budgeted result due to two reasons: planning variances and operating variances. Because planning variances and operating variances, it will impact. Remember, planning variances are beyond the control of management. When evaluating the performance, planning variances should not be considered. You should not consider. Planning variance cannot be directly controlled by the factory workers. Also at ASL, purchasing is done by the central unit, and hence operating rate differences are not controllable. Rate changes you can't control. Labor rate changes you can't control. In computing performance result for the special bonus, the planning variances and operating rate variance should be eliminated, both variances to be eliminated, because rate control is not within the factory workers. Operating usage variance, material and operating efficiency variance for labor are controllable at the factory level, therefore they are responsible for that. When evaluating their performance, they have to be considered. Any variance in these should be considered for the special bonus computation. During the period, factory reported favorable material usage variance of 8.55 and favorable labor efficiency operating with 1.5 million. Altogether, the analyzed 10,050,000 favorable variance have been achieved at the factory level. Favorable variance, they have done it well. If there is an adverse variance, then you can say you have not achieved the target. If the operating variances are favorable, that means they have performed exceptionally well. The adverse variance generated from the material price and planning variance and labor rate operating variance have been basically consumed the super result of the factory workers. Hence, factory workers should be provided with the special bonus considered in the operating usage and efficiency variances. And rate variances we need not to consider. Why? It is belonging to procurement division and the HR division. Right, that is the answer for part D of the illustration. That is the end of question number 6. This is budgeting combined with variance analysis, standard costing and variance analysis. Right, now the last one we are going to discuss. This is coming under linear programming, LP model. Right. We will read the illustration and what they asked to do. We will see what they asked to do. Formulate the information of the problem into a linear programming model. You may assume the following notation: wine P, quantity to be produced in number of cases. Okay, it is given in number of cases P, and juice Q, cocktail R. You have to construct linear programming module and you have to interpret the final matrix, and notation given for the slack variables and required optimum quantity, binding resources, unutilized resource. We will do that one. Okay, first we will read this illustration and identify the constraints if available. Right. City Glassware Private Limited, CGL, manufactures three types of glasses: wine glasses, juice glasses and cocktail glass. They are manufacturing glasses. There are three types of glasses: wine glasses, juice glasses and cocktail glasses. There are three types. For the export market and using a common injection molding machine and three different dies. The dies are changeable based on the desired product. Each type of glass is packed into canvas cases containing 10 such glasses in each case. Very good information. 10 glasses per each case. 10 glasses per each case. Right. Each case containing 10 glasses. Right. The die for wine glasses can be used to produce 60 cases in 5 hours of machine time. Okay. Wine glasses, wine says denoted as P. Okay. P can manufacture P. You can manufacture 60 cases for 5 hours. Per hour you can manufacture 60 cases per hour. Per hour you can manufacture 12 cases, right, per hour. Then, while the die for juice glasses can produce 100 cases for 5 hours. 100 cases for 5 hours, that is Q. 100 divided by 5, then 20 cases per hour. 20 cases per hour. Then cocktail, 50 cases of cocktail glasses can be produced with die 5 hours machine time. 50 divided by 5 R 50 divided by 5, that is 10 cases you can manufacture. The injection molding machine is operated only on a schedule of 150 hours of production per month. 150 hours. That is maximum availability. Only 150 hours are available for manufacturing. Right. Based on the current supply contract, at least minimum 300 cases of wine glasses should be supplied in a month. Therefore, wine glasses mean P should be greater than or equal to 300. You have to supply 300. This is another constraint. And other constraint is machine time only limited for 150 hours. Remember now, the time required to manufacture one case you have to find out. 1 hour manufacture 12 wine cases. Q, that is 1 hour can manufacture 20 cases of juice glasses. Right. How many minutes it will take to manufacture one case you have to find out. Here 1 hour you can manufacture 12 cases, then 60 minutes divided by 12, we require 5 minutes to each of P. Okay, we will write it down like that. It required 5 min per glass, 5 min. Then Q required how many minutes? 100 cases for 5 hours mean 300 minutes you can manufacture 100 cases. 300 divided by 100, 3 minutes per case, 3 min. R 50 cases for 5 hours. Then 5 hours mean 300 minutes. 300 divided by 50, it is 6 minutes. 6 min per case. Okay. Maximum availability 150 hours, that means in minutes it is 150 into 60, 9,000 minutes. Therefore, you can here identify the constraint. Identify the constraint P five P plus 3Q plus 6R should be less than or equal to 9,000 minutes. That is the first one, right? That is the first constraint you can identify. Second constraint, P should be greater than or equal to 300, you have to supply minimum 300 P. That is the first para. I have identified some important constraints, or I have simplified it. Okay, we will move to the next. The main raw material for glass manufacturing is quartz sand, and it is limited in supply due to the prevailing import restriction. CGL can currently procure only 6,000 kilograms of quartz sand in a period of 1 month. It is a constraint again. Utilization of this material by each type of glass is as follows: wine, juice and cocktail. Okay, wine mean P, juice Q, cocktail R. Quartz sand per requirement per glass is given. Now we have to look at how many cases to be produced. You have to look that, because PQR mean P mean how many cases of wine glasses, Q mean how many cases of juice glasses, R mean how many cases of cocktail glasses, how many cases. Therefore, this is per case, each case, per glass, per case 10 glasses will be there. Therefore, I will multiply this 150 by 10, it become 1.5 kilograms. If we multiply this one by 10, this become 2.5. Here it is by 10, 3 kilograms, right. Per case of wine, 1.5 kilogram of material required. Per case of juice, you require 2.5 kilogram. Cocktail, per case, you require 3 kilogram. Now you can constrain, write it down, 1.5 P plus 2.5 Q plus 3 R should be less than or equal maximum availability 6,000. That is another constraint. P mean number of cases of wine glasses, Q mean number of cases of juice glasses, R mean number of cases of cocktail glasses. Cases, right. That is why I have multiplied, each case contain 10 glass, right. Next one. CGL stores its production during a month until it is dispatched for exporting in its warehouse, which has a capacity of 1,800 cubic feet. Total space available 1,800 cubic feet. This space requirement of each type of glass is given in the following table: wine, juice and cocktail. Space requirement per case given. Therefore, nothing to do with these figures. Look at wine, 0.5 cubic feet, juice 0.75, cocktail 1 cubic feet required each. Now we can write down the constraint. If you identify the constraint, Here wine mean P, juice mean Q, cocktail mean R. You can write down the constraint 0.5 P plus 0.75 Q plus R should be less than or equal maximum availability 1800. That is the next constraint. Now we have already identified how many constraints? 4. Then next one, the selling price and contribution to sales ratio of each product is given below. Wine, juice, cocktail, contribution sales ratio is given, selling price per case also given. Then you can easily find out. This is wine mean P, this is P, this is Q, this is R, right. $30 into 40% mean, here it is 12. $60 into 40%, this is 24. 50 into 40, this is 20. Now you can calculate your contribution. Objective function is to maximize the contribution. You can write down your contribution. You don't know the total contribution. P, $12 per unit per case of wine glasses. Therefore, 12 P plus 24 Q plus 20 R, right. That is your objective function. Now here and there we have just done the computation. Then with the prevailing production constraint, the management of CGL is uncertain whether they are making optimal mix of product where the profit of the operation is maximized with the given resources. It is given. You are working as the management accountant of CGL and you are advised to evaluate the optimal product mix per month using the linear programming simplex method, right. Accordingly, you need to formulate the problem information into a linear programming model so that you are able to utilize the computer software to obtain the final simplex tabulo required. 6 marks given. Formulate the information of the problem into a linear programming model. First step is done. Define the variables. It has been defined the variable wine P, juice Q, cocktail R, quantity to be produced in number of cases given. Now we are going to, what we are going to do? We are going to calculate or we are going to construct linear programming model, right. Linear programming model we are going to construct under the given scenario. The variables already being defined, right. Okay. I will move to this one. I am going to construct linear programming model. When I am going to construct linear programming model, first one you have to establish the objective function. First one, I will objective function. Objective function. Objective function. Your objective is to maximize the contribution. Contribution. Maximize the contribution. Then you can write down C equal contribution. You have to look at the how are you going to maximize the contribution. You can go back and see contribution 40% from the selling price. Therefore, PQR, you can work out what are the selling prices, $30 and $60 and $50. Therefore, C contribution here it is 12P plus 24Q plus 20R. This is your objective function which you are going to maximize. Objective function. Then constraints. You have to identify the constraints. Okay, first constraint is the machine time available. Machine time available and sands availability and the maximum production, everything is there. Okay, first I will take machine time. P, each glass of wine glass required 5 minutes, 5P plus 3Q plus 6R. This total utilization should be less than or equal, maximum 150 hours are available, 115 to 60 minutes, 9000 minutes. That is one constraint. This is, I will say, machine time. Machine time. Right, first constraint. Second constraint, we will take quartz sands 1.5P plus 2.5Q plus 3R should be less than or equal, maximum 6000 kilograms are available. These quartz sands. That is the second constraint. Third constraint is the space availability. Space. 0.5 cubic feet for P, 0.75 cubic feet for Q, 1 cubic feet for R. Therefore, 0.5 P plus 0.75 Q plus R should be less than or equal, maximum availability 1800 cubic feet. 1800 cubic feet. Space availability. 1800. Fourth constraint, maximum or minimum supply. Whether it is in optimal product mix or not, you have to supply minimum 300 cases of wine glasses. Therefore, P should be greater than or equal 300. This is the fourth constraint. Then you have to write down the non-negativity constraint. Non-negativity constraint. Anyway, P is not 0, no, it is mandatory, it should be greater than 300. Therefore, either Q or R should not fall below 0. Okay, either Q or R should be greater than or equal to 0. P anyway, it is say that greater than 300. That is the minimum supply. This is the linear programming model which you require to work out. Because here objective function already determined, therefore variables have already been defined, no need to define the variables. You need not to define the variables because it has already been defined. That is done. That is the first part. The second part, now you have the final matrix. You have to define, you have to evaluate this final matrix. Okay, first one, what they asked to do. Optimal product mix, P P, Q and R and the resulting contribution in USD. Go to this one. If the product is in the optimal product mix, how can you identify these P, Q, R are the products? If they are in the optimal product mix, it only considers 0 and 1, zeros and 1. And in the solution row, it only includes zeros. Now R, it is not 0. That means if you produce product R, you are losing $12. That is an opportunity cost. If you produce PQ, there is no opportunity cost, but if you produce R, there is an opportunity cost of $12, right. Therefore, optimal product mix, you can, in the optimal product mix, you can identify P and Q. P 300, Q 2200. That is the optimal product mix. P 300, Q 2200. Those are the two. Then optimal contribution that you can earn 56,400. This is the optimal contribution. That is the last cell of solution column or solution row. This is the optimal product mix. Optimal mix. Optimal mix here. These two. That is done. Then next one it asks, it is asking binding resources and their opportunity cost. Binding resources mean resources which has been fully utilized. You can come to this point, right. Look at S1 slack variable for quartz sand, that mean unutilized resources S1. S2 mean slack variable for machine time in minutes. S3 slack variable for warehouse space in cubic feet. S4 slack variable for minimum production of wine glasses in number of cases. Now look at S1 and S4. S1, S2, S3 and S4. If any of these slack variable appears in solution column, variables in solution, they are unutilized. You can see S1 and S2 available in the variables in solution. That means S1 and S2 are unutilized. If they have been fully utilized, you can see in the solution row opportunity cost. Here you can see opportunity cost 32 and 4 opportunity cost, right. 32 and 34, there is an opportunity cost. That opportunity cost means they are shadow prices. Shadow price S3 and S4. S3 mean warehouse space in cubic feet. If you lose 1 cubic feet, you will lose $32. S4, that is minimum production of wine glass. If you reduce 1 wine glass, you will gain 4, right. It is reduced, right. If it is reduced, then you can increase your opportunity cost is $4, right. Okay. Then that is the shadow price. S3 and S4. Warehouse space is a binding resource and the minimum supply is a binding resource. That is those two you have to, I will show you the answer as well. Binding resources S3 and S4 USD 32 and USD 4 per case, and unutilized resources you can see S1, this is the unutilized resource, right, unutilized resource. S1 mean this is number of kilograms, this is quartz sand, 50 kilograms of quartz sands, and S2 900 minutes in machine time excess available, right. That is unutilized resources. Okay, right. We have already answered this one, we have already answered. we have already evaluated and we have already calculated, we have already explained. Okay, next one, what it asks. The management of CGL is considering acquiring a temporary space on lease for the storage of finished product with the aim of increasing production. You are going additional spaces. In this regard, advise the management of GCL on the following. The maximum space that should be taken on lease provided that other scarce resources will remain constant. If you acquire additional space, you can increase the production, but other resources will remain same, right? Therefore, you have to see up to which extent you can go, right? Up to which extent. The revised status of resources, product mix and contribution of CGL for the period of 1 month only, maximum space is taken on lease, right? I will go to the, this is space, maximum space, S3 is the maximum space. If you increase 1 cubic feet, okay, 1 cubic feet, 3 and 1/3 of material, 3 kilogram and 300 grams of material will reduce, right? Then if you increase 1 cubic feet, unutilized resources of machine time will reduce by 4 minutes. Up to max, what is the maximum you can increase? 50 kilograms available. If you increase 1 cubic feet, you will reduce the material by 3 and 1/3. Then how many units you, how many cubic feet you need to increase in order to utilize this one? Okay, we will work out 50 divided by 50 into 50 into 50, how many kilo, how many units into 3 1/3. Then you can manufacture 15. If 15 cubic feet increase, you will fully utilize this amount. Then 900 divided by 4, 225. But you can't increase 225 cubic feet because material is not much available. Material only available for additional 15 cubic feet. Then if you increase 15, this will be the effect. There is no effect to this one. If you increase the output by 15, this Q will increase by 20 units. The effect 50, if you increase 15, this will be 0. Reduce 4 in, minus 4 into 15, 60 minutes will reduce. Here what will happen? 1 1/3 into 15. That means it will increase by 20. Then this will increase additional 20 units. There is no effect to this one. Total contribution will increase by 32 into 15. 32 into 15, 480. 480 total contribution will increase. Then if you add 480 here, 56,880 will be the answer. Because you can maximum your space you can increase up to by 15 square foot. The reason, material will be fully utilized and you can't go up to 225 because material only limited for another 15 cubic feet. 50 kilograms are only available. Then if you increase by 15, S1 also become a binding constraint, binding resource. Okay, we will see the answer. Okay, you can see how it will work. S1 quartz sand unutilized 50, amount to be utilized if your capacity increase by 15 cubic feet, right, then fully utilized. Then this one you can use 225 amount to be utilized. In order to fully utilize, you have to utilize 225 square foot, but not required cubic feet, because only 15 cubic feet if you utilize, the material will be unavailable. 1 square foot increase in storage space will utilize one third of kilogram of quartz sand. Unused sand stock is only 50 kilogram in a time period of 1 month. Therefore, only 15 square foot of storage space is possible, since quartz sand supply becomes a binding resource thereafter. Machine time is still not a binding resource, because after 15 square foot, available space increased by 15 square foot, material will be a binding resource, but still machine time is more than enough. Then this is the impact. S1 50 into 3 1/3, that is 15 square foot. S2 revised status, Q 20 cases in additionally it will be added, and P there is no change, and revised contribution 56,880. Right. That is the complete change what will happen. The buyer has now expressed their agreement to reduce the minimum number of cases of wine glasses to be supplied per month is to 285. Right. No need to supply 300 glasses. You can reduce it by 15 glasses. Demonstrate using the final simplex tabulo how this change will impact resources, the product mix, and the contribution stated in the original final simplex tabulo. You can go back. Now you are going to reduce, not 300, you are going to reduce this requirement by 15 units. Now generally, if you change, sometime S3, Q will be the most profitable one. Now you are going to reduce this output by 15, right. If it reduced by 15, what is the impact? If you drop 1 unit, 4 rupee, $4 gain will be there. If you reduce 1, $4 gain. If you reduce 15, then $60 gain will be there. Okay. Then here what will happen? I will work out here itself. You are going to reduce this one 1/6 into 15. It is minus, right. Minus 1/6 into 15, it become 2.5 will be reduced. That means this become 47.5, right. Then 3 into 15 into 15, 45, 945, this become 945, right. Then if it is multiplied by 15, then 2210, it will go up. Multiplied by 15 minus 15, this become 285. Multiplied this by 15, 60, this become 56,460. That is the real impact. If you reduce 1 unit, this is the potential impact. If you increase, now 300 become 285, mean you are going to reduce the minimum supply by 15 unit. If you reduce it, this is the potential impact. You can go back to the answer and see. You can see S1 change in cases 15 cases, minus 1/6 into 15, 2.5 kilograms will reduce. That means utilization will be 47.5. 3 into 15 cases S2, additional 45 minutes will be available. 2/3, that is the one, if 1 unit change, this is the impact. If 15 unit change, 10 unit will be added, 2210. Here if you change 1 unit into 15, 285. Finally, if you reduce 1 unit of P, contribution will increase by 4. 4 into 15, 60 is the effect. 56,400 original contribution will increase to 56,460. Right, that is the end of the last question we have discussed. This is the interpretation of final simplex tabulo, and it is a complete illustration on the linear programming. It's coming under short term decision making. We have discussed the paper, the linear programming final matrix. We have evaluated how it will work out. All these figures we have evaluated, right? All these figures we have evaluated. If we receive this one, if we have changed the space, what will happen? We have already discussed this effect, right? Right, we have completely done July 2022 paper, and all question we have discussed. You have to see how I am going to attempt each of the illustration. First, what you need to do at the inception, you have to carefully read the illustration and you have ranked which question to be attempt first. You have to select the easiest question and don't deviate from the allocated time, and then you will be able to manage the time and you can answer all 7 questions, right? First section is MCQ question. That MCQ 20 marks will be allocated. Thereafter 10 MCQs will be there. You can practice more and more question and face the exam. The second section 10 marks question each for 4 questions, 40 marks will be given. Last 2 questions, those are long type essay question, 20 marks will be given to each question and 40 marks will be given. That is the total arrangement. Then that is the paper structure. That is the end of recent paper. You can go to the CA Sri Lanka YouTube channel and you can watch these videos and you can watch and practice more and more. Then you can easily pass this exam or CL3 Advanced Management Accounting. We will meet again from another paper discussion. Till that, you have to study hard and practice for your next exam. Thank you.